So hi everybody, I'm Tony Craddock. I'm the Director General of the Emerging Payments Association. And today for our monthly Insights interview, I'm joined by somebody armed with a cup of coffee when I'm armed with a glass of gin and tonic at the other end of the world. Steve McLaughlin is the CEO of and founder of FT Partners based in San Francisco. But he has a global perspective on payments, which I believe is unique. And as nominated by Gary Cardone last month from Chargebacks 911, he's sure that this is going to be an insightful commentary for you. So, Steve, a big welcome.
Thanks, Tony. Thanks for having me. No pressure. It's all good.
So, look, Steve, you've got a background in Goldman Sachs and investment going back many, many years. You're known as somebody who's a driven, highly motivated individual. Can you share with me what are the things that are behind you that really make you driven and motivated?
I think it's, growing up as a young kid, my mother would essentially allow us to take jobs throughout the neighborhood and give us jobs at home. So she put us to work early. We'd come home from school and we get to pick like 20 jobs around the house to make 2 cents, 1 cent, 5 cents, doing different things. And I would run around doing all the jobs. So I think she instilled in me early on a hard work ethic, and there wasn't a weekend that didn't go by that we weren't, cleaning up the lawn or painting the basement or doing something. So just been pretty hard driving for a long time, I guess. But these days, I think it's more just like building something and helping people and building our team out and really the satisfaction of helping clients is it's incredible.
Yeah, brilliant. And I'll tell you what, when you were younger, you never thought to yourself, I'm going to go in the fintech industry, because fintech probably didn't exist. So what is it that drew you to the world of financial technology? And in our case, a part of it which is representing payments.
I think I always wanted to do some entrepreneurial things in my life, to some extent. And so, whether that was like shoveling driveways or raking leaves for somebody, or, all sorts of other stuff I used to do. When I got to be at a very large investment bank like Goldman Sachs, I think I wasn't very entrepreneurial, so I gravitated towards entrepreneurs. And when I was in the financial institutions group in New York, it was the dot-com era. It was 1995 to 2001, 2002 when I was there. And basically all these young, higher growth dot-com companies were looking for somebody to talk to them, quite frankly. And Goldman was really not paying attention to companies that were below multi-billion in value and still don't really. So that became something I focused on personally. And I think had I not done that, a lot of these companies would have not gotten much attention. But I was young and hungry and I really just enjoyed listening to these stories. And I didn't know what I was talking about at the beginning, but after listening to 500 of them, I started to know more than they did to some extent. So it was that was really my first entree into kind of the tech side of financial services. Was in the early dot-com days when we met Elon Musk and some of the people that founded PayPal back in the day, and many other ones, the CEOs of E-Trade and Ameritrade and Scottrade and all the different online brokers back in the day, which have their own histories these days. But yeah, so I got into it really early on. And then, when I started this in 2002, there was still no such word as fintech. We were called, and we still are, financial technology partners. And then it just, blossomed. But you're right. I had no idea it would be, that FT Partners would be as big. I knew the space was going to be big because if you sit back and you look at financial services, in particular payments, it's all pretty much digital, right? So there's no hard goods for the most part. You've got your Verifone terminals and you got credit cards, but 99% of financial services is really digital and also hugely broken. And, it's still pretty broken, in my opinion, still pretty slow, still pretty dysfunctional in so many ways. So it feels like, we're still only in the second inning of this whole space emerging.
So I would say you're the sort of person who could be seen as a catalyst for the industry. You're not a fintech, but you're an enabler of other people. And the fact that, as you said, you went out, you talked to people and you found out about their businesses and you learned about them. And then you found that actually you could help them to be successful by bringing them money. How does that make you feel, knowing you've been a catalyst for the growth of our industry?
It feels great. I feel very, very fortunate, quite frankly, to be in an industry where there's so many good people. And I think, we talk about this internally a lot, is that we have made a difference in a lot of people's lives, a lot of companies' existences. And we think, the knock-on effect of that is great for consumers as well. At the end of the day, fintech should be great for consumers. And that's something that's really important to us. If we find a business that we don't think is high value to consumers, then we won't take it on. And so that's really important to us as a value system. And also helping companies. I was on Twitter yesterday talking about a company called Marqeta, which we found when they were doing 1 million of ARR back in the day. And we talked to 200 investors and nobody would give them money. And, we ended up giving them their first $1 million in that round. And next thing you know, all sorts of other people started flooding in and they were able to get 25 million. And that company now is worth $10 billion. And so, or whatever the market is saying it's worth in the press, put it that way. And, but like that was a really struggling moment in time for those guys. And, a lot of bankers would have just given up or stopped or gone on to something more important. But we cannot leave these clients behind. And so we're going to be there for them till the bitter end. And then the good news is they've been very loyal and we've worked with them on every deal they've done since that day up until now, being worth, quite a bit more. So it's quite gratifying. Jason was at my wedding, so it's my wedding was, I just got married last year. So I'm a little bit of a late bloomer.
That's really brilliant to hear. And I can see your genuine concern and care for the companies that you're involved with.
Yeah, it's something we talk about all day long. The only measure we have across the whole entire firm is client happiness. So the clients and the employees feeling great at the end of every transaction. And that's the only thing we care about. And that's why we don't have any revenue targets. We don't have anybody calling on clients. It's just all about, making the current clients, feel great about their transactions and making sure that they know we never give up on them.
Brilliant. So what have you seen apart from the COVID situation this year? What are the kind of top 2 or 3 changes you've seen in the industry since over the last 5 years or so?
Last 5 years? I mean, I think the one thing we're starting to see is, the effects on the larger incumbents. They pretty much stopped innovating, stopped growing because a lot of the growth was taken up by all the new guys like Stripe and Square and Checkout and Adyen and Molly and all these other great companies. And so there was, kind of my rules, like when you can't really grow and you're not differentiating yourself, you merge and you cut costs. So now you saw all the big guys merge and they're kind of it's just a long cost cutting process and integration process. And that's all good. I think it's good for the industry. It's good for them. I think the cross-selling and upselling could be great between their banking clients and their merchants and their payment networks. But it's also stifling, I think, their innovation, their ability to buy things. And I think since all those big mergers happened where, Fiserv and FIS and Global Payments all consolidated with WorldPay and others and First Data, you pretty much haven't seen them make any acquisitions, where they were all on an acquisition tear for the prior 10, 15 years. And so I think that's given rise to a whole bunch of these new companies that I mentioned a few minutes ago. And whether it's Marqeta or I2C or GPS in London on the card issuing side, taking business away from the TSYSs and Comdatas and some of the traditional legacy players, you're seeing that whole same thing. And with Square now at close to 100 billion market cap, Adyen at 30 or 40 billion going to 100, Square or Stripe going from 35 to probably 70 to probably 100. I believe in all those companies doing really well. Not to mention PayPal. What Dan Schulman has done there is nothing short of incredible. So I just think, I'm not trying to name any one change, but I just think that the moment to shine has been here. And I think the reason some of these payment companies have zipped up to such high values is because people realize it's almost a once in a lifetime new opportunity to kind of create these epic, payment networks or payment systems and payment players where you're going to have a really hard time creating another Square in the US. And there are some people that I think have a decent shot at that, like a Toast or a Spot On, for example. But certainly Square and others have a big head start. The other thing I think we're seeing is more international payment players, companies like, they were forced to be international from day one, like Checkout in the UK. We did their Series A at almost 2 billion valuation, or Molly at $1 billion just a couple months ago, or Multi-Save Pay in the UK. There's some of these new companies that are becoming quite big because they're cross-border and forced to operate in so many countries with so many different payment methods. Then you got the people that are backing them up, like a P-Pro out of Germany in the alternative payment space. So you just have a lot going on with companies getting drawn internationally. It was, you never really saw a lot of the U.S. payment guys get into too many countries. They had a little bit of a venture. Elevon, does some stuff internationally. Global Payments was not very global, quite frankly. And First Data was not first in many, many countries, So, I mean, it took them a while. So it's going to be interesting to see, going forward, just how much consolidation there is. But I think, those are the kind of things we're seeing at a very high level.
That's really helpful. And it's great to see the kind of the breaking waves and the patterns that you're talking about here and how it's going to evolve. I mean, are some of these big companies, are they going to find a way of either protecting themselves from the innovative, progressive companies that you've been mentioning, or do you think that they're kind of yesterday's firms and they'll just be replaced by these up-and-coming companies?
No, I mean, look, with so much money on the line, these firms tend to innovate, right? They are going to innovate. They're probably going to buy a bunch of smaller companies along the way. You look at, First Data, they bought Clover for $30 or $40 million or something like that. And it's actually become pretty pervasive in the industry, and it is a competitor to Square. So you are seeing a lot of innovation there. I think they're also going after more integrated software plays. So they're finding different ways of getting to the end customer that some of these new innovative players are not. So I think it's going to be an ongoing battle. It's just like JP Morgan's not going to get put out of business by Chime anytime soon, and so on and so forth. Citigroup, they'll be around for a very long time. So it's just, the battle continues. And I think at some point you will see the next generation of new companies coming in to compete with Square, even though Square, like I said, is pretty preeminent. You're going to see, more and more players come into the space. So, and that's kind of what we're seeing coming out of this coronavirus. Not that we're out of it yet by any means, but the Series Seed and Series A and Bs for these newer high growth companies are really starting to take off. I mean, I think you're going to see just another big wave of innovation over the course of time. A lot of it is people leaving Square, people leaving Stripe, people leaving Robinhood, and people leaving First Data and Global Payments, these other places. So when you get all those mergers and synergies means, a lot of times some of the smart, innovative people, you get tired of it and they want to leave and go do something really, really different. So you're seeing just a lot of people leave some of these firms and do really innovative things. So I think that's another decade of innovation. And so the next Square, Stripe, Adyen, they're out there.
They're being bred at the moment, and they're going to be out there exploding and doing phenomenal things. That's very exciting, isn't it?
Yeah,
that's very exciting. I mean, this is not an industry that's come to the end of its runway.
No, not at all. I mean, e-commerce is still a very small fraction of the overall, economy and GDP. So I think it's still a lot to go. And even when all that goes, whether it's all e-commerce or whether it's e-commerce enabled or omni-channel, or you're paying with your phone at the point of sale physically, there's going to be more and more innovation coming along. So it's still early stages.
Yeah, that's a great place to be. And I think if we're looking ahead a little bit here, and we're looking at on a backdrop of a world that's changed, it's increasingly digitalized, and people often talk about what's the compelling event, what's the killer app in certain markets, and I look at the world of 2020 as being something that's it's digitizing society. So we're going into 2021 with that having happened or happening. What are the things you think we need to be a little concerned about going into 2021 when we're looking at our industry? And it has so much potential, but I'm sure there's some risks and some dangers that you're looking a little bit over the horizon and saying we should watch out for that. What are those things?
I'd say, regulatory compliance, risk, fraud, things like that. Those things I think are going to be a pervasive problem. And the good news is there's a lot of great technology solutions addressing them. So for every problem, there's opportunity. And so you look at, you mentioned Gary Cardone at the beginning, Chargebacks 9/11. They're one of the only firms like really at scale chasing the global chargeback problem. How many people in the world see something on their bill and refute that and create a whole loop, a nightmare for the acquirers, the processors, the issuers, and the associations. And that's going to become a bigger and bigger and bigger problem out there that needs to be solved. And so you're seeing great companies get created to do those things. Companies in the fraud space like FeedZai or Sift or those kind of firms running around. Yes. So I think and there were AML compliance companies like Fernergo and others. So you're just seeing a lot of solutions to the problem. So it's hard to think of a problem where there isn't a lot of solutions. I think some of the problems, I don't know if it's a problem. Visa and MasterCard, I think, are incredible companies that are an incredibly important part of the ecosystem and PayPal, but they are big, they are dominant, and they do. I don't feel that they're monopolies. I feel that they enable a lot of existing things to happen, but I think that also creates an opportunity for others to come in and change the system. At the end of the day, does it really need to be 2.75% cost to process, the payment at McDonald's or to buy a shirt? The interchange and all the assessments and fees and everything else is quite expensive, and to the point where you can offer 1%, 2% rewards, just to incentivize a card payment. But it's a lot of friction on the system. And so what's interesting is to see how can transaction costs come down a lot. And I think there's kind of always a push and pull there, because as you bring down new payment methods that are cheaper, that could also thwart transactions or create greater fraud. So there's this sort of, yin and yang of, how do you get the transaction costs down? It really shouldn't cost anything, at the end of the day, to transfer $50 from me, to a merchant, right? And so are you going to see, more Venmo at the point of sale, more direct debit, more verified customers? If that, I don't know, bar on the corner knows me, which not that I go to bars every week, but if they do, why does it cost $3 to verify me and go through all these different bank networks and associations and everything else just to get that transaction done? So again, I don't have a solution to that, but I think there's plenty of people that are going to come in and try to figure that out. And those that tried, unfortunately, have run into a brick wall because there are too many costs involved to try to bring those costs down. So therein lies a huge, 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 tremendous opportunity there over the course of time. It's just ridiculous that it should cost so much money to process a transaction.
And the great news is that actually what's happening is that let's not worry about the slice of the cake we have. Let's just make it a bigger pie. And that's certainly as increasing volumes of transactions are going digitally and internationally, we can work at taking friction out and not punish anybody in the industry for doing so, which I think is a great opportunity as well. Agreed. So look, it's been great, Steve. We've got just a couple of minutes left of this little Insights interview with the EPA today. I'd like to ask you, you shared a little bit about your mum at the beginning and, the things that made you the motivated, driven guy that you are. If you were to be advising somebody else who's thinking about getting into this space, what are the top tips you'd give them?
To get into payments and fintech? First of all, thing I would say is, like, a lot of times, I think outsiders think of it as like maybe too narrow of a niche, or maybe a little esoteric, or maybe a little boring, right? Because it's just money movement. There's it doesn't sound as sexy as Spotify or Airbnb or Uber, but, when you really get into the depths of, the economy and the financial systems and the payment systems and just all the stuff we're talking about, it's actually quite huge, quite dynamic. And it basically touches every element of technology that you can think of. There's AI, there's ML, there's hardware, there's software, there's payments, there's recurring revenue, there's just so many different elements. It's cross-border, it's government, it's consumer, it's B2B, so it's pretty dynamic, it's fun, it's interesting, and I would encourage people to get careers in payments and fintech, whether it's at a company or an investment bank or at a venture firm or at a startup. it's a great place to be. It can be a lot of fun. And the people are just incredible in this space, yourself included, Tony, and in the audience. Nice to meet many of you out there. And if I don't know you, feel free to drop us a line. But yeah, no, the people are great, and it's just an amazing sector. So yeah, come on in. The water's fine.
Thank you, Steve. That's fantastic. Steve McLaughlin, CEO of Financial Technology Partners, and a guru and a visionary. So thank you very much indeed, Steve, for your time.
My pleasure, Tony. Thanks.